Bitcoin seen a nice move to the downside. All of this move actually over the past couple of days, but particularly today, at least in the last few hours, and you can see that it actually respected the major channel. So you can see previously where this channel was acting as a resistance here, and then you can see again another couple of touch points, and now a third, maybe even a fourth touch point at the bottom of this channel. So it's quite an interesting one to keep your eye open to, the ascending channel. And again, you know, we look in terms of touch points, and this is a zone. So the way I like to try and draw my channels is, yes, there's a channel, but then there's a let's say a zone within the channel where I'm looking for, you know, reversals. This one just narrowly missed out, but this one would have been a nice reversal. And again, you're looking at this and these two, so you probably would have got confirmation that we were in a channel, you know, each time we're moving. But this one specifically would have meant that this would have been a nice move. Even this, look, I mean, these were fake outs here, move to the upside. Now we're kind of hanging around the heart line, but I still anticipate further move to the downside. So again, a couple of channels, but more importantly, we're respecting a much wider ascending channel, which I think is certainly one to keep your eyes peeled on. From an open interest perspective, the move that happened, when you see red on the chart on open interest, that's money leaving the exchange. Or let's say, you know, if you've got, let's say there's 1,000 contracts, right, as an example. If there's 1,000 contracts against the totality of orders on Bitcoin, let's just say, well, then open interest just aggregates all of them open orders, so they're open. Yeah, the moment one of those contracts gets sold or closes, yeah, so close being taking profit, liquidating, whatever it would be, open interest drops. Okay, it's always like a delta of open orders versus closed orders. And you can see here right now that when this move came down, a ton of orders got closed. Well, that would signify liquidations, and actually you can see here that those liquidations occurred on that move. Also, one of the things I like to look at is the divergence side. So you can see instantly that buy pressure came in really quick and sharply like that, so you know there was weight behind that move. This is just an indictment of how retailers think, how retail traders, let's just say. You can see the move happened, yeah, up here, very much market maker led. You can just tell one big order, maybe a couple of big orders came thrashing through. We smashed through this level of liquidity here. You know, that was around 536 Bitcoin, so not insignificant, but still, you know, it thrashed through this level and then finished at this level. The problem I have, and this is what happens all the time within the retail side, is look, open interest comes flying back in, which is to say more new orders coming in. They could be shorts, they could be longs, doesn't really matter. They are new orders against the delta of the previous closed orders here. Bearish pressure maintains, i.e. market orders are still coming in for shorts, open interest is coming in like you say, but the price starts to move up. So what that tells you is bigger players have absorbed that move to the downside, and now they're pushing it back up again. But people who are catching the bottom of this think that, you know, the move is ready to carry on to the downside. So I always like this tool because it gives you an indication of what's going on at a deeper level. And you can see, you know, if we move to Bookmap as an example, Bookmap will give us, you know, a similar kind of thread onto that. So taking that move again, which we've just saw, it was kind of staying around the kind of VWAP, but then it absolutely trampled through all of that liquidity here, which is what we've just seen on Trading Light, and then gets absorbed at this level, you can see, and then we come back up, and then this then acts as like a new buffer for limit orders as buys down at that angle. So you can see the order book's looking quite big to the open interest is probably more favoring down to the buys at the moment than the sells. You can see there's an awful lot of liquidity down here, so we may still see, you know, moves to the downside. There's certainly more liquidity down here for sure, so we'll have to keep our eyes peeled on that. Going back to Trading View, let's just have a quick sense check before we, as you guys know, if you've been following my channel, I've had my eyes closely linked to the Fibonacci time extension, which again occurs literally on the 10th of February. So we can see here it's getting closer and closer. My bias here is going to be move to the downside. It's just each time we've caught this Fibonacci time extension, it's been some level of significance. You can see here this caught about a 2,170 basis point move. Caught this here as a long, and the way you've got to kind of look at this is look at the general trend. So the general trend here was up, and then we moved it down at that Fibonacci time. Then the kind of sequence was, this was a difficult one to gauge, but the sequence was, you can see, relatively flat. So on that one, you've just got to look at the smaller time frame, which was certainly on an uptrend, carried on moving to the upside as well. So it's not like you can say, well, the inverse to the current trend. We could absolutely continue to rock it to the upside. I don't believe that will be the case. I believe we will be coming to the downside. If you see my previous video, I explain exactly why my bias is still relatively down, and that's to do with the Elliott wave count and the fact that we are probably in a C correction. We can maybe come up and reclaim that 25-200 area and then a move to the downside. But the other thing is always this idea around the crab harmonic pattern that's moving in this way for, well, kind of started on November the 4th, moved to the downside, come back up to the crab's belly, upside down crab's belly, let's just say, and then the top side is here. What you're looking for is that Fibonacci 168 between X and D, and that point actually tops us out here. So right at that 25,226, and anyone who knows, again, if I have my liquidity levels, you'll also see it's nicely poised at that point there. And that's just about really it. So again, for me, just to finish off with my trading ideas. Okay guys, so in terms of a trading plan, realistically, nice and simple. I've got no reason to change the narrative. I'm going to be looking for something around, you know, this middle area here. If I'm looking to long, relatively tight stop loss, risk to reward ratio, again, I'm going to be targeting maybe this zone, maybe the top of the zone. Just depends on where I want it to go. I don't want to be greedy. I'm happy with that kind of narrative. We can see how many times we've done this before. The only time I would change the narrative on this, and we'll go over it in a second, is if we start to see big volume coming in, then I'd be looking to change that narrative. The other way would be, you know, again, if we looking to short, I'll be looking to short again somewhere around here. I'd have a relatively tight stop loss to the upside. I'd still want to clear these zones here, so again, a little bit less favorable in terms of the risk analysis on that side. I just don't know if it's going to go back up to here yet. Maybe. I think we're probably expecting more of a move to the downside. So you may, if you're feeling a little bit more risky, just want to get a market sell in here. Don't go too crazy with leverage. Look to take profit somewhere in this zone. If we want to hold that for a little bit longer in terms of risk appetite and length of holding on to your trade, then you can maybe look at doing something like your fib retracement levels. You can see right now in terms of our levels, you've got 236, again, nicely in that zone, in that area where I'd want to be taking profit, and maybe where I'd be looking to do a long, as you've just seen. Next zone down, again, right at that 21,200, which is another key and significant area here. So maybe that's the next level there. And again, in terms of the pattern, it would be, yeah, a nice head and shoulders to start. So keep your eyes peeled on that. Now, if you are in a much longer hold in terms of your position, you can, if your appetite is to hold on a little bit longer, then maybe you can consider other levels further down, and then I'll be targeting things where my imbalances are. So we have some key imbalances around these zones here, which we may want to come and take. And again, if we can map that with our Fibonacci retracement tool, you can see we've got some kind of key ones in and around that kind of 0.5. So I think that would be a really interesting one to kind of look out for. That's at the $20,250 area, and then we've got some further ones in between the golden pocket and of course your 0.5. So that's something if you want to hold on a bit longer. Right now though, I'm really only focused myself on day trades and seeing where they go. Also, just because we always like to show them is the pivot points, just to keep a sense on where we are with these. On that, I want to show two sets of pivots, and I'll go with let's have a look at the weekly to start. So right now you can see we are nicely kind of in and around that pivot point. We actually thrashed through the pivot point, and now the target would obviously be there. If we just overlay that actually with the channel, that's the minor one. Let's see, bring this in really quickly. You can see, yeah, S1 is just at that area there. So again, that might be a nice area to take profit. But again, you sometimes break through these. You can see we already broke through it once to the downside and got into my little zone here. So just keep your eyes peeled on that. If we check this out to previous pivot, that would be here. So you're looking at 22,156. Again, nice area for a move back to the upside and a retracement, or a reversal rather. I just want to check the monthly. On the monthly, again, we haven't came down to the pivot point yet, so the pivot is at 21,200. There's some nice confluence for you right there, guys. So again, another interesting area why we think, you know, we can start to see a move back down to this area here. And then just lastly, before I go, I want to just look at my volume zone. So this is total volume of the entire Bitcoin price to see where the main areas of stickiness are. I use the visible range volume profile, map where the peaks are, and as you can see right now, we are in a peak. So where's the next volume zone? Well, it's actually right down here, and then we have another one right at that 30k mark. So right now, this has been a tough area to get to, but I think when we do move, we should see a move that's quite explosive. And again, not to say that it's aligning with the 10th of February, but that is an important date. So we shall see. Anyway, that's all I've got for you on this one. Hope you guys enjoyed it. Let me know if you guys agree with any of that, disagree with any of that, and in the comments, that would be great. If you guys interested in trading with us, you can see that in the link in the description we have $50 bonus for signing up with ByBit. Also, if you guys are interested in joining a Discord server of like-minded folk and community, head over to Discord and come and say hello again. Link is in the description.